morning, everyone. I'm Greg Faranello, head of U.S. rates for AmeriVet Securities, and welcome to another week of Monday Minutes. Let's get to the questions. Long bonds recently traded with a one handle. Do you have any thoughts? With the pool of negative yielding assets on a global basis growing, illiquidity in the marketplace over the course of the summer months, and liability flows very much alive in the marketplace, there has been spillover into the U.S. market, and in particular, the U.S. long bond. Is the yield curve distorted, and should the Fed ignore it? The short answer is yes. We do think there are distortions in the U.S. yield curve off the back of the negative yield story, but we also think the negative yield story is also a negative growth story. So with that said, we think it would be short-sighted for the Fed, Powell, and the core of the Fed to ignore the signals that the yield curve is sending on a short-term basis. So with that, any thoughts on Powell and Jackson Hole for this Friday? Well, I would say that it's time for the Fed and the market to get on the same page. The market is expecting a mid-summer easing, and Powell is indicating a mid-cycle adjustment. We do think he will use Friday as an opportunity to signal to the market that more cuts are coming, but with the forward Fed funds rate now 100 basis points a year out, and the yield curve really doing nothing but inverted, the market is saying that the pace of the cuts is not fast enough. So let's look for the Fed and the market to get on the same page this Friday. I'm Greg Faranello, and this is Monday Minutes.